So Jim Cramer just said that Palantir is a buy. Now I gotta be honest with you, I have mixed emotions about this. Not gonna lie. On the one hand, I'm happy that people are saying positive things about the company I'm passionate about. On the other hand, that's Jim Cramer, known as the kiss of death of stocks. The guy who recommended Didi just before Didi imploded, Bear Stearns, and the guy who said to sell Tesla in 2010, missing out on 21,000% of profit. I mean, he has a very interesting track record when it comes to stocks. So the question is, does it mean we have to sell Palantir because it's Cramer? Or does it mean we have to buy Palantir because it's Cramer? I mean, which one is it? I'm confused. Well, don't be. Of course, I'm exaggerating. Obviously, there's a lot of memes about Cramer that we can make here, and it would be a very easy video for me to make. Super entertaining. We can make all the Jim Cramer memes. But I don't think it will have any value for you as investors, which is ultimately what I'm trying to do here. It's okay to have funny stuff sometimes, but at the end of the day, we're all trying to make money here. So what's the lesson here from what Cramer just said about Palantir? Buy, sell? I think the lesson is ignore. Ignore is a neutral thing. It's not good or bad. Don't buy, don't sell because of Cramer. In fact, don't buy and sell because of anyone. Let me explain what I mean. Over the past 6 years, Cramer gave 22,000 stock recommendations. Now, if you followed his recommendations, it's not like you lost money, contrary to the memes. I mean, you did make money. You probably did, a little bit under the S&P 500. You underperformed the S&P 500. In fact, there's a research. Somebody took a look at Cramer recommendations from 2000 to 2017 versus the S&P 500. And if you put in $1,000 in Cramer, you're at $2,000 at the end of the period. And then if you put the same money in the S&P 500, then the S&P 500 would have given you $3,000. So you still made, profits with Cramer, but not as good as the S&P 500. And that shows me two lessons here, which I think you need to understand. Lesson number one is that, look, S&P 500 is probably the best investment for anyone. In fact, I think the S&P 500 as an ETF, VOO for example, right, should be in every portfolio. Even if you're highly targeted towards individual stocks, you should have an S&P 500 component in your portfolio, and I have it as well. And 40% of my portfolio is an S&P 500. It's always have been. I think it has to be in every portfolio. So that's lesson number one. Lesson number two here is you shouldn't listen to anyone. Not Cramer, not Tom Nash, not any other YouTuber, not Bloomberg, not the Wall Street Journal, not anybody. Why? Because at the end of the day, all these folks who select stocks, when I talk about Palantir and Tesla, I'm passionate about these companies because they suit my profile. It doesn't mean it suits your profile or every single investor's profile. When Cramer recommends 22,000 stocks, he's on TV. He's trying to be entertaining. It's not necessarily the best research for you, your circumstances, your risk aversion. So what I think is better, I think is the lesson here, is not to listen to anybody specifically, myself included. Don't listen to anybody. Build your own process. Listen to people who teach you a process, not people who give you stock picks. And that process can be this or that or the other, as long as it follows one simple principle, which is eliminating emotions from your investing process strategy. That means that there's no anxiety, there's no fear, there's no greed, there's no FOMO, there's no panic. These things are your worst enemy. Emotions are the worst enemy of any investor. So if you can find a process that eliminates emotions from your investing strategy, follow that. Don't follow stock picks. Now, I actually teach a process on my Patreon page, patreon.com/Tom Nash. A little plug for my own Patreon, why not? And that's my process, and that's the process I teach to my students. And if you want to learn more about that, head on over to our Patreon. We'd love to have you there. The principles of our process are very, very simple, and I believe simplicity is the key to success. Overcomplicated stuff, they don't work for me. So the process is very simple. You build a budget, and in that budget, you figure out your expenses, your income, and you figure out how much you want to invest every single month, a fixed amount of dollars in the stock market, and you do that every single month. You take that amount, 30% of it you put to the side. You put it in something liquid that gives you a little bit of return. 70% of the money, you start investing in stocks. You start investing in bonds, whatever the mixture is. And I talked about this mixture on our Patreon page. There's a mixture based on age, risk aversion profile. There's different profile allocations for each portfolio. But eventually this money will go to your portfolio. How does it go to your portfolio? Well, you build a short list of stocks you want to invest in. How to select these stocks? Use a process. I like to use financial modeling, a DCF, a discounted cash flow valuation model, which I teach on my academy on patreon.com/Tom Nash. I teach this process. This process will objectively let me see which stocks are better than others, which are mispriced, and which I want to invest in. And then I decide a certain amount which I'm going to put in this stock every single month. Now, of course, that will stop if my thesis changes. If something bad happens in the company where I decide no longer to be an investor, I pull out the money. But as long as my thesis is intact, I'm going to put a fixed amount of dollars every single month. Now, if a stock goes below a certain threshold price, which I will determine for myself, then I'm going to buy more. If it goes above that price, I'm going to buy less. I want to be buying when the stock comes down, not when the stock goes up. That is an objective process. I teach all of this on our Patreon. I don't want to go deep into this, but the process is very simple. Money on the side so you can double down when needed, and then a fixed amount every single month into companies which you have selected based on your process objectively with no emotions. If you want to learn more about this, patreon.com/Tom Nash. Join the academy. We have a couple of spots left. It's a brilliant way to learn about financial modeling and evaluating stocks, not getting buy and sell alerts, which I absolutely do not want to provide. I want to give you the tools to fish instead of giving you fish. Simple as that. So no hate to Cramer here. Much love to the Palantir community. And I advise you to learn your own process. Whether you do it through me or through anybody else, listen to the people who give you the tools, not people who are trying to feed you fish. See you next video.